We've considered in detail whether our current settings are sufficiently restrictive and judged that based on what we know at the moment, rates will remain on hold for the time being.
The Reserve Bank has ignored international pressure, leaving the cash rate on hold for the 7th time in a row.
The board making the call just 5 days after the US cut rates. So when can homeowners expect some relief down under?
Finally, interest rates are starting to come down across the world. Unless, like us, you live in Australia. But just because the RBA is holding out doesn't mean Aussies won't feel the ripple effects of rate cuts thousands of miles away. You might be surprised at where the impact is, including in investments you might not even know that you own. Hello, I'm Rebecca Jones and welcome to the very first episode of the Bloomberg Australia podcast. Today on the show, the RBA has kept rates on hold again this week and basically said, hey, get used to it. Now, interest rates are starting to come down around the world, including in the US, where the Fed made its first cut in 4 years last week. We've also seen rate cuts in China, the UK and Europe, but not here. Now, this is an Aussie podcast, so our very first priority is to discuss what all of that means for, yep, you guessed it, property. But we're also going to check in on how the global state of play for interest rates is impacting everything else in our investment portfolios. To help me to do that, I'm joined today by Rich Henderson. Rich is a Melbourne-based reporter for Bloomberg who has a pretty cool job. He reports on the intersection of asset classes. That is, he spends his 9 to 5 trying to work out why when one asset class goes up, another goes down. And then he writes, or today, talks about it with me. Hello, Rich. Thank you for joining me.
Hey, how's it going?
Very well. Now, Rich, I have so many questions, so let's rip in. Why are Americans getting a nice rate cut on their mortgage and I'm not? You know, frankly, it doesn't feel very fair.
It basically comes down to the jobs market. The US jobs market is starting to show signs of fragility, whereas in Australia, things are remaining robust, and that means the RBA can afford to keep rates a little bit higher for a little bit longer. There are some other factors at play. One is that the US was a bit more aggressive in raising rates, so it makes sense that they can be more aggressive in cutting rates, and the RBA will be a little bit slower because it was less aggressive relative to the Fed. And also the way interest rates impact an economy is quite different in Australia compared to the US.
How so?
Well, mortgages is the big one. The US has mainly fixed mortgages and Australia has mainly variable mortgages. And I've had a mortgage in both countries. And in the US, it's kind of weird. You know exactly the dollar and cents you pay every month for 30 years. Whereas in Australia, obviously it's variable, and the experience of the last few years has been quite painful because that's gone up for many Australians, including myself.
Certainly in Australia, it's quite uncommon to have a fixed mortgage for more than, a couple of years, right? But that you're saying that's commonplace in the US.
Oh yeah, it's like 90%.
Interesting. Let's have a listen to what the Australian Treasurer Jim Chalmers had to say after the RBA announcement on Tuesday.
We've seen growth in our economy has been quite weak. We've seen consumption has been weak. Discretionary spending has been going backwards. All of this is indications that the interest rate rises already in the system are already combining with international uncertainty and persistent inflation to slow our economy quite substantially, and we saw that in the most recent national accounts.
So, Rich, I'm interested in your thoughts on this one. Is the subtext here that the government is perhaps a little further along with their thinking that inflation is consistently trending where it needs to be? What are the key differences between Bullock and Chalmers here?
The political dimension is fairly obvious. People don't like higher rates. The government wants rates to come down to make everyone happy. Bullock, however, is worried about something that is a little bit more profound. The thing that's keeping her up at night, the nightmare scenario, is a moment that we saw back in the 1970s in the United States. There was an oil crisis in the early 70s. That triggered runaway inflation. The central bank thought it had a grip on it, but then it got cold feet. It flip-flopped a little bit and inflation spiraled out of control. It took interest rates near 20% to get it under control, late 70s into the 80s. We saw that in Australia as well, and there are Australians who bought a house. My parents are some of those Australians who bought a house at that time with rates at, 18%. So that's what Bullock is trying to avoid. She wants to be absolutely certain inflation is under control before there's a rate cut. Because if you start to flip-flop, inflation can spiral out of control again.
She's really sticking to her guns, isn't she? I was listening to the press conference on Tuesday after the announcement, and the references to words like sustainably, explicitly, needing to see that consistent trend. She kept repeating, right, that bringing down inflation was the most important thing that the bank could do to ease pressure on households. How is that message being received?
The messaging is so important. Central banking, central bankers, what they say and how they say it is almost just as important as the level of interest rates. And so she's being very thoughtful in the words she's using. She's declining to offer too much, in her words, forward guidance. That's telling the market, telling investors what the RBA will do down the track. It wants to wait until the data comes in to make a decision. And right now, that means keeping interest rates elevated.
And she also pointed out that there was only the one instrument that the RBA has to control the economy, and whereas the government has many. So they are going to be pitted against each other, to some extent.
Definitely.
Yeah. Let's have a little look more broadly now, Rich. I'm interested in the impact on the ASX and markets more generally. Last week, the ASX hit another all-time high. Can you explain why the stock market is going gangbusters in this interest rate environment where rates are still high and staying put?
Yeah, so in Australia and in the US, we're sort of trading near record highs for stocks. That's partly because we did get a cut last week by the Fed in the US. But also in Australia, investors are expecting the RBA to cut, whether that's in the next few months, whether that's next year. We're pretty certain we will get a cut.
Are there any ASX-listed stocks that look like they're going to win or perhaps lose from this weird rates environment? What are the analysts telling you?
Well, Macquarie put out a great research note earlier this month, basically saying, there are a few sectors and companies that they expect to do well in this environment of falling interest rates in Australia. One is construction materials, companies like James Hardie, which actually have a big business and presence in the United States as well. Consumer staples like Coles and Woolworths, and also pharmaceutical and biotech companies, think like CSL or ResMed. These are companies that can do well in a falling rates environment. But broader than that, if we do achieve this soft landing, then the market will be able to, keep its corporate profits intact, which will then support asset prices, stock prices.
When we come back, we'll have a look at how exposed your super fund is to the Fed. And the answer is probably more than you think. Rich, I don't mean to pry, but I think I'm going to. Have you checked your super balance lately?
I try never to look for some reason. I don't know why. I never like looking.
What a confession. Look, I confess I've been putting it off. What with all this market volatility, Fed excitement spliced with this stoicism we've seen from the RBA. But what impact can I expect to see when I eventually do pluck up the courage and log on and have a bit of a look?
You will be pleasantly surprised.
I will?
So because stocks in the US and Australia are trading near record highs, there are huge allocations in super funds. So you'll be pleasantly surprised. Other things are probably doing quite well as well, like private equity, private debt, real assets. That's anything from infrastructure, data centers, ports, airports. Super funds own all of these things all around the world, and the prices, the value of these things have held up.
You talk to big global investors every day, like as part of your job at Bloomberg, and I know that for a fact because I can actually hear you because we sit quite close to each other in the bureau. How are these big super funds, these global asset managers, positioning themselves for the eventual lower rate environment? What are they telling you?
Well, there is quite healthy risk appetite, and so that means investors have a propensity to buy risk assets. There are things like stocks would be the main one, but also maybe equities or fixed income bonds in emerging markets where you are rewarded for a little bit more risk with higher returns. There's an appetite for that sort of risk taking, and that's what's pushing up stock prices around the world. And also because this has been so well telegraphed, these rate cuts by the Fed and what we can now expect in the months ahead by the RBA, those rate cuts have been factored into prices. So we can see just by the fact that we're sitting near record highs for those equity markets that investors have moved there.
You mentioned offshore assets before, and look, I find it pretty interesting that around half of Australia's super fund assets, that's a $4 trillion industry we're talking about, are invested overseas. What American assets are we invested in that might win from Fed cuts? And conversely, which ones are likely to lose?
That's a good question for a number of reasons. So there's a lot of, we call them real assets, things like infrastructure, property that are held by super funds that are in the US.
Like toll roads and things like that.
Toll roads, ports, airports, data centers, office buildings. Office buildings is one of the losers because of the shift to flexible working arrangements. There's not been the recovery that people expected in office buildings in particular, so there's some exposure by super funds. Things like data centers have a tailwind from the AI boom, that revolution. It requires a lot of computing power that sits in these data centers. Some super funds own some of those data centers in the US. They're the kind of things that can win or lose. But the broader point is that as interest rates come down, asset prices, equity prices tend to rise. That's the rule of thumb.
So it's not all doom and gloom for us Aussies, even though we have higher mortgage rates than we've had in the past couple of years. It has been a pretty full-on couple of weeks, though. What's next on the global economic calendar for Australia? What should we be paying attention to?
So in the months ahead, we're going to get our quarterly inflation numbers, and that's really influential for how the RBA decides on interest rates. We'll also have interest rate meetings by the RBA in November and December. They take a break in January, back in February. So these will be the really key moments when not only does the RBA set those rates, but also, as we saw this week, how Michelle Bullock talks about these decisions, talks about how the RBA is thinking about these are critical.
And we saw on Wednesday, we had monthly inflation figures come out and they were on target, right, around 2.7%. So all of that is going to be factored into the pressure cooker around the Reserve Bank to do something. But, there's that one school of thought, and certainly one that Bullock has subscribed to, that they won't rule anything in or out, and this inaction is in fact an action in and of itself, right?
Exactly, and that 2.7 number included or is affected by rebates from the federal government and some state governments for energy prices. So that's another layer of complexity that the RBA has to disentangle because it's almost artificially showing lower inflation within that target band. And so it heaps pressure on the RBA to act, but also the RBA knows it's a little bit artificial, so they have to wait longer to make sure inflation is actually coming to target.
And also explain that as well, right? Because that wouldn't be something that, I would imagine that springs to mind when people are thinking about the inflation figure that they see, on the TV and the evening news.
Exactly. It makes Bullock's job quite tough, but she does seem to be up to the task.
And the next RBA decision is coming in November. Anything else happening that week, Rich?
The US election, yes, will fixate everybody.
Do you think it's going to distract Australians from their mortgage and the price of doing the weekly shop at Woolies and Coles?
If Trump wins, yeah.
I won't ask you who you think's going to win, but I will check back in with you in a couple of weeks' time. Rich, it's been fantastic. Thank you for joining me.
Thanks so much.
And thank you for listening to the very first Bloomberg Australia podcast. I'm Rebecca Jones. This episode was recorded on the lands of the Wurundjeri people of the Kulin Nation. It was produced by Paul Allen and edited by Chris Burke and Ainsley Chandler. Don't forget to follow and review the show wherever you get your podcasts and sign up for Bloomberg's free daily newsletter, Australia Briefing. Go to bloomberg.com to subscribe.